Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
Hello, I'm Michelle Makori. This is Kitco News coming to you from the PDAC convention in Toronto. The Federal Reserve has raised its key interest rate by 75 basis points, the first time that it's taken such an aggressive move since 1994. And Fed Chair Jerome Powell says that another 75 basis point rate hike could be on the cards for July. My next guest says it's way too little, way too late, that the Fed will most likely pivot, and that the dollar is going to be dethroned as the sole global reserve currency. I'm very pleased to welcome Willem Middelkoop. Willem is the founder and chief investment officer at the Commodity Discovery Fund. He is the author of several best-selling books, including The Big Reset. Willem, so great to have you with us.
Yeah, great to be here. Finally in person and back in Toronto.
Yes. And
PDAC.
And at a much nicer time of year.
Yeah, but I heard next year will be in March again. It will be cold again.
Well, weather may be colder, inflation's getting hotter.
Yeah.
So let's talk about what this means for the Fed. As I just mentioned, the Fed raising rates by 75 basis points. Also saying that a similar rate hike could be on the table for July. What's your reaction to this?
I think the Fed was really scared by the way inflation took off. Actually, central bankers are a bit cornered because they printed so much money to stimulate the economy and to solve each and every crisis in the last 2 decades. And now the inflation is red hot, so they need to act now. And they're a little late, so now they need to move fast and in big steps. But while they do this, the economy is cooling off quite a bit. And if you read the reports from real estate in the US or whatever, I think a recession is close. It could be a severe recession. And once the Federal Reserve understands that there's a severe recession on the way and prices are going down because of this risk, this recession risk, then they might pivot and stop raising rates sooner rather than later. So don't expect them to raise rates for years to come.
Well, how long do you expect the rate raise to continue?
Well, they might do another one, but I think in a few months, in a few weeks, people will really get stressed about the state of the US economy, about the world economy. And when prices go down, they try to talk inflation down. So they don't want to raise rates because that's bad for the economy. So they try to work on their inflation expectation management for the broader audience. And by using a lot of strong language, they hope they can create a soft landing.
Right, so shifting the sentiment via the message that they're putting out there.
Yeah.
Let's talk about the big picture here, though, because this all ties in to the Big Reset, which is, of course, the theme of one of your best-selling books. And in it, you point out that all fiat money systems are doomed to fail, that they've been put to the test for more than 200 years and not a single one has survived. Well, has survived in terms of being the primary reserve currency.
Well, no, it's actually worse. If you study, I did quite a bit of research for that book, and we studied actually the last 300 years of monetary history. And there have been over 200 fiat money systems, so not tied to gold, and they all failed in the end. They all failed. So it's almost guaranteed that the current monetary system, because it's no longer back to gold or anything intrinsic, will fail as well. And it's my thesis of the book that they might to bring gold back into the system, revalue gold, to stabilize the monetary system in a way.
So outline the basic premise of the book. The dollar is going to be dethroned as the global reserve currency.
As the sole global world reserve currency, we could move from a unipolar world to a multipolar world. We could have several blocks. And that's actually what you see happening now after the start of the war in the Ukraine. You have this Eastern Bloc in which China supports Russia, not militarily, but financially, economically. And you have this Western Bloc. So you could have the countries in the East no longer willing to take dollars. Actually, you see all countries east of Germany adding to their gold reserves. Right. So that's very significant.
I want to circle back there. And this theme of the bifurcation of the monetary system has been gaining a lot of traction, hearing a lot about it here and elsewhere, particularly when it comes to some commodity backed currency, perhaps a central bank digital currency backed by commodities. But before we get there, I want to focus a little bit more on the book. It's a fantastic read and so filled with information and historical insights.
Can be downloaded for free at our website.
That's how I got it.
Yep. It's not expensive.
Not expensive at all, but priceless in terms of the value of information, Willem. But in it, you make the case that central banks have been waging a war on gold for decades. You cite several examples. Well-documented, substantiated examples. I was reading some of this and going, what? I don't know that. I was quite taken aback. But one thing struck me in particular, and that was one statement by Alan Greenspan, which touches back on what you said now about Fed and Powell and managing sentiment and expectations. And according to a transcript from the FOMC meeting in March of 1993, which you cited in the book, the Federal Reserve Board discussed how inflation expectations are influenced by the price of gold, and Greenspan explained that a drop in the gold price would lower inflation expectations, and that he wanted to change the dynamics of the gold price so it wouldn't be an alarm for inflation and the dollar.
This is the core. This is the core.
And in this transcript of the FOMC meeting, it is written, and I'm quoting Greenspan here, if we're dealing with psychology, then the thermometers one uses to measure it have an effect. I was raising the question on the side with Governor Mullins of what would happen if the Treasury sold a little gold in this market. There's an interesting question here because if the gold price broke in that context, the thermometer would not just be a measuring tool, it would basically affect the underlying psychology.
Well, you read it very well. You read the book very well because this is the core of the problem. So the Fed understands that since they took the dollar off the gold standard in 1971, they need to work on gold because people follow gold as a sign of rising inflation, and gold is the anti-dollar now. And you can see this every day. Every day when the US opens, the markets open, gold drops a few dollars. And this gold price is managed by selling a lot of futures, we call paper gold, through the COMEX system. And I think the stress within this system is getting larger and larger. We see a lot of physical gold leaving the COMEX vault. So there's coming more and more pressure in this paper gold system. And one day they might lose control. And then you could see very a quick revaluation of the gold price.
Right. Well, you make the point that gold is the canary in the coal mine. Yeah. Central banks see that as well. That's why they've tried to address that. But the Fed is not allowed to sell its gold reserves. Is that correct? The US Treasury is not legally allowed. That's why they started the swap system.
Yeah, and that's why since the 1960s, they've been trying to convince all their friends. Canada sold all their gold. The UK sold almost all their gold in the 1990s. So they told all their friends, sell the gold. It's not longer it's not important anymore in this monetary system. But the US didn't sell 1 ounce themselves. And now more and more countries understand this game and they're adding to their gold reserve, especially countries in the East. And countries from the West, from Europe, they repatriated their gold, which was stored at the Federal Reserve. So there's a lot of stress building in the system, and one day it will break and you see a very strong move upwards.
But explain how the gold swap system works if the Fed itself may want to change sentiment by suppressing the price of gold, but legally can't. So how does the swap system work? Break that down for us.
You have the Bank of International Settlements, which is the model of all central banks, and it's based in Switzerland. They use them a lot. So when you have a lot of reserves, for example, the Federal Reserve has a lot of reserves. Actually, it's the US Treasury who has the reserves, but also on the books of the Federal Reserve, you can do swaps. So you keep the gold stored in the safe, but you can sell it and then make an agreement and a contract that it has to be replaced a few years later. We don't know specific how it works, but we see the selling every day. It has been documented that they did this also in the 1960s through the London Gold Pool. The London Gold Pool was a coalition of Western central banks selling some physical every week to keep the gold price down, $6 to $35 an ounce. So, it has been documented rather well.
And you do actually point out several cases very clearly in the book and substantiate them. What would you say was the most blatant example of central bank gold suppression in history?
I think what happened in the 1960s, because that has been documented so well. I just mentioned it. It's the London Gold Pool. Go to Wikipedia, look for the London Gold Pool. It's all out there because it's such a long time ago. Everything has been studied. And actually, what was very telling that France, who was part of these Western countries selling gold every week on the market, in 1967, France didn't want to join any longer. And they stopped. They left the London Gold Pool. Actually, it sent one of their Navy ships to Manhattan to collect the physical gold from the Federal Reserve vaults. And that's a very telling sign. So study that part of history and then you understand the current situation.
So how does that fit in with the current situation right now? Are central banks still actively suppressing gold prices?
That's my opinion. They're not open about it, but everything points to that. It's very interesting to study what the bank...
But we don't have FOMC meetings that point to it quite like we did in 1993 in terms of sentiment.
You always learn that 10 or 20 years later when books are being written and people are, passing away and they've mentioned things to friends. So we don't know yet. And I tried in my book to find all circumstantial evidence to support this claim, and I'm not the only one telling this, so this is widely accepted now. And especially, I mentioned some of the Chinese and Russian quotes from specialists, from their monetary specialists, and they point to this managing of the gold price as well. So the Chinese and the Russians understand, and my book was even translated into Chinese, so I know from Chinese specialists that they follow this line of thinking.
Well, the book was published in 2014?
2014, yeah.
Okay. Since then, we've seen, as you mentioned earlier, that China and Russia have tremendously bolstered their gold reserves with their central banks.
Yeah.
And in fact, we're seeing that central banks around the world are adding to their gold reserves, with the exception of Canada, by the way.
Yeah, they can confiscate the gold mines, so that's easy.
That's a very, very, very scary prospect you've put out there. And
it's more a joke than...
Yeah, a joke,
actually.
but you know what we've seen recently with some of the
with
freezing
Trudeau,
of the bank
you never
accounts,
know, it's the new dictator.
I will caution the term dictator, but I can see that sentiment is not necessarily that far off. But I'll play it safe.
In Europe, sorry for that, but in Europe, people are very negative. They see what's happening here, and we always thought Canada was the land of the free, like the US, and many people moved and immigrated to Canada, and we're surprised, to say the least, what's happening
as
here.
am I, and I'm based in New York. I don't want to delve too much into Canadian politics, but certainly...
No, we shouldn't do that.
Not this time. No, well, we're still guests in Canada.
Yeah.
But certainly a lot of red flags being raised over some of the recent behavior from the Trudeau administration.
Yeah. But we see the same in Europe, eh?
Yeah, and some fascist... leanings, shall we say, in actions, but let's bring it back
to the
gold.
safe.
Not that safe, but let's bring it back to gold and bring it back to central banks, because it begs the question that if central banks are so good at suppressing and manipulating the price of gold,
why should you invest in it?
Why invest in gold?
Because manipulation never continues forever, and manipulation gives you a way to buy something cheap. And if you study, we've seen some great examples. Actually, I mentioned them in my book. Once there was a crisis regarding the potato futures, also in Chicago, on the futures market. Somebody was short potato futures. And at a certain moment, this all collapsed. The whole market collapsed. Prices went up. Same what happened with nickel a few months ago. So we know from history, you can try to manage these prices, but it can't go on forever. And when it stops, when it breaks, you get a very sharp rise. It happened to palladium 3 years ago. There were a lot of outstanding shorts, paper shorts, through the future market in palladium. And then prices start to move rapidly, and it was the end of the paper shorts.
Okay, so break down what this global reset looks like, given where we are now. You wrote the book in 2014.
Yeah.
We're in 2022 now. Given all of the geopolitical tensions that you mentioned earlier, given where the state of the US economy is at the moment. Talk to us how the global reset happens.
The thesis of the book is that one day we'll need to find a new anchor for world's monetary system. So the dollar needs to be replaced. We know the IMF is working on that. They have the SDR, which is a currency basket. We could have a digital SDR. Once we have the central bank digital currencies rolled out, you could make a basket of all these central bank digital currencies, have them managed by the IMF, and use them to price commodities, use them to price oil. And that could be an easy transition to a new phase for the international monetary system. We could also expect gold being brought back into the system to stabilize inflation, to stabilize the inflation fears, to stabilize the system. So gold could be added to this digital currency basket. And well, this is what I discuss in the book.
And you mentioned that you predict the bifurcation of the monetary system with the West and the other countries with the way that the dollar has, not in the book, subsequent to the book.
In the end, in the epilogue, I said, I hope that the blocs from the East and the West can have a joint cooperation to move to this new phase in an easy and comfortable way. But I also envisioned in the epilogue that we could have a fight between the East and the West. And actually, that's what happens now. And I've been calling this the start of World War III, and not in a kinetic way. Well, the kinetic part is in Ukraine, but financially, economically, this is World War III. We are fighting China, and China and Russia are fighting us. And they do this by selling. They don't invest in US treasuries anymore. They're adding a lot of gold because it's the anti-dollar. So this is a war. It's a financial, economic war. And according to me, it's World War III.
World War III on the stage of financial trading systems and currencies.
Yeah, and the risk of this confrontation, while 10, 15 years ago, when I was writing the book, we had the hope that we could work together with the blocs, East and the West, to move this system towards a new phase. And that would have been a much better solution. But now we're in this conflict, and I think that's scary.
Either way, if it's a separate system or a joint system, in both scenarios, the dollar is dethroned. Not necessarily excluded, but dethroned is the sole.
As the sole world reserve currency. And because the countries in the East choose openly for physical gold, the role of physical gold within the monetary system will grow stronger again, while it was the wish of the United States to really phase out gold out of the system, only have a paper-based system, and that idea failed. So gold will regain its central part within the monetary system. That's my vision.
Okay, so how does this World War III play out?
That's very difficult to predict. It's easy to start a war. It's difficult to finish one.
And you're saying we've started?
Yeah, it's my opinion that this should be seen as the start of World War III, in which the West is totally is confronting the East. And actually, I'm not the only one. There was a great research piece by Credit Suisse, by Sultan Posa, who used to be a Fed official. And he called his piece, which was published in March, so after the start of the war, that we're witnessing the start of Bretton Woods 3.0. Bretton Woods 1.0 was 1944, 2.0 was 1971, when they took the dollar off the gold standard, and he calls this the start of Bretton Woods 3.0. And he says this is a move away from a dollar-centered system to a commodity-based system. And he calls the People's Bank of China the central bank of all commodities, because the Chinese can do all the arbitrage now on the Russian commodities. So, and that's frightening.
It is definitely very frightening. Is there any way for the US to turn this around at this point?
This is very, very difficult. And there's one scary scenario, and that's they know the US has been very vocal for decades that they don't want another country to grow that big and important that they can take over the leadership of the world. Well, China is on its way doing that. So it could be in the interest of the US to create a huge crisis with China as well. And that could even become a kinetic war. And that's what some people are afraid of, that could happen.
A physical military altercation between the US and China.
And that could be around Taiwan.
There has been a growing tension in that area. But the current administration in the US has shown that it has absolutely no stomach, no appetite for any kind of conflict. We saw the debacle of the withdrawal in Afghanistan.
Well, that's what China hopes. So China hopes they can take over Taiwan like they did Hong Kong without firing any shots. And this is the big topic, geopolitical topic on the horizon the next few years.
How imminent is that?
Well, I'm not an expert in that field, but I'm reading a lot by military experts. Most of them say this will happen, so China will move within 5 to 10 years. But now we have the Ukraine, things become more fluid. But also China is looking and studying what happens to Russia now, don't want to make the same mistake. And never forget that China is gaining a lot more power without firing a shot because they control Russia now. Right. Without China, Russia is gone, financially.
Yeah.
So I even read a very interesting analysis that China might be hoping that Russia breaks up, that Putin and his clique lose control, and then they can take everything east of the Ural, where all the commodities are. So nobody knows. But it's getting very, very interesting and also very scary.
Yeah, very scary indeed. And we've had this conversation with several guests on the show that the US weaponizing the US dollar is what has driven it away from other countries. If you're sitting in Saudi Arabia, do you want to keep your reserves in dollars when you can see that the US can just put sanctions on you and freeze everything?
But study the monthly tick report, which shows which countries are buying the US treasuries. Russia sold them all. China stopped buying US treasuries around 2012. But even in Europe, there's a huge anti-US sentiment growing because people don't want to accept the US as world's policeman anymore. So many people in Europe are looking at Russia and China. We would like to trade with them, work with them, and be friends with them, but that's getting
right. Okay, so from an investment perspective, which is what our viewers want to know, you're sitting here, you're watching this, you're seeing these developments potentially unfold. What's the move?
Well, when we follow the line of the Credit Suisse Zoltan Pozsar report, which states that we're moving to Bretton Woods 3.0, which is a monetary system more centered around commodities. You can expect the price of commodities to keep rising. You can expect the value also from a geopolitical point of view of commodities to keep rising. You can expect the position of gold to become more and more important. They could even bring gold back into the system, revalue gold. That could also be a wish of Western central bankers, because never forget, all central banks have gold on their balance sheet. So when you revalue gold, you help all balance sheets. So, but the jury is still out. It's very uncertain. It's a very fluid situation.
But what you are certain of is that a reset is coming.
Oh yeah. But look at the website of the IMF. They talk about the new Bretton Woods moment. The United Nations Secretary General has been pointing to a reset. There's so many people who've been pointing to that. Even Mark Carney, he did a speech at Jackson Hole in 2019 calling for the end of the dollar as the world reserve currency. And that's what I do in my book. I follow all these leads, all the circumstantial evidence, and I make that business.
So you wrote the book in 2014.
2013.
2013, published 2014, excuse me. Expected the reset to happen by 2020.
Around 2020.
Firstly, I applaud anyone that gives timelines to any kind of forecast. It's a very brave and bold
It's
move.
dangerous.
Yeah, it's I'll say bold.
Yeah.
But, okay, it hasn't happened yet.
Well, we're in the process.
So what many of our guests, like Rick Rule, like to say is that what is inevitable is not necessarily imminent. And the Fed has continued to kick the can down the road. We thought that this would be something that we saw after 2008. So where are we in the road?
We started the reset process, and when we're in 2030 and look back, we say, "Oh, look look how many things changed within the system since 2020." But it's like being in the forest, surrounded by trees and not seeing the forest. You know, it's very difficult to understand where you are once you're in it. But things are changing so fast, and that Credit Suisse is publishing a report like that, calling it Bretton Woods 3.0, that's telling.
Yeah.
And that's an expert.
Very telling indeed. So a system where we have a commodity-backed currencies, basket of commodities on the blockchain as a central bank digital currency, tokenized potentially.
Could be.
Because where does Bitcoin fit into this picture? Now, Bitcoin, granted, has had a very bad week.
Yeah,
but there are some that advocate for a Bitcoin standard that see Bitcoin as being some kind of reserve being purchased by central banks. Where are you in that line of thinking?
Central bankers don't own any Bitcoin except El Salvador. So far. They all own gold. So they have a vested interest to use gold to support the system and not Bitcoin. So Bitcoin is like an alternative currency. Bitcoin is even a step further than gold, because gold is part of this monetary system. It's still part of this monetary system. You buy Bitcoin because you think the central bankers will lose all control and will have hyperinflation worldwide. And that's why you want to own Bitcoin, because there are only 21 million Bitcoins which can be mined. Already 20 million have been mined, almost 20 million. So there could be a fight for the last few million Bitcoin, and that's why I buy some. Right. But only 5 or 10% of your portfolio.
So you have about 10% of your portfolio in Bitcoin?
I sold quite a bit, but I have a core position which I don't touch. Let's say 5%.
You're a 5% hodler on Bitcoin.
Yeah. And I'm adding in my trading portfolio once I think the decline is done, and then I add quite a bit more.
Okay, so
but maximum 20-25% in my book.
Okay, that's still a very sizable position for Bitcoin. We have a lot of conflict with our viewers, Willem. Those that love gold tend to really, really dislike Bitcoin. The guys that like Bitcoin tend to be pretty okay with gold.
They like to make fun of us because they say you didn't make any money for 20 years and things like that.
So,
but they're brothers
choose?
And sisters.
That's my point.
They're brothers and sisters. You should have them both. And if you don't want to own gold, you don't understand history. And it's the younger generation, they don't understand history. But now they learn a hard lesson.
So give me the percentage portfolio breakdown of asset classes that you would that you have to get you into trouble here.
No, because I'm not an advisor.
Correct.
We have a permit to run a fund, but I don't have a permit to advise. But what I do personally, with my net worth, I've been doing that for a long time, 25% of your net worth in real estate, mostly your home, 25% in physical gold and silver, good business for you guys, 25% in equities, could be an investment fund or whatever, and 25% you keep cash or Bitcoin, so a very liquid part.
And very quickly, when you say gold and silver, what is the best way to invest in gold and silver?
I prefer at least 50% silver compared to the 50% gold. But if you want to do 2/3 of...
I mean ETFs, physical gold, physical silver, gold, silver miners, just physical.
That's physical, because the silver miners are in the equity part.
Okay.
So that 25% is physical, just physical. And allocated, not pool accounts. I'm sorry, but allocated.
Okay.
So minimalize the number of doors between you and your gold and silver basket. I don't have them at home, but it's nearby. It's in a privately owned vault. Don't put it in a bank vault, a privately owned vault where you can go to when you need it.
And I'm assuming you have the same mentality with Bitcoin on a cold wallet?
Yeah, that's right. I use my broker account for the trading part, but the Bitcoin I will hold forever. They're on a cold storage device, also in a safe, not in my home. I don't want any criminals in my home.
Yeah. a public service announcement. It's not in your home. Nobody go looking up Willem's address. So to recap, if I may, we've started World War III. A monetary system reset is inevitable.
And imminent?
Imminent?
Yeah, because we're in the first start of the process, like Credit Suisse described.
Okay, and hold both gold and Bitcoin.
And expect a revaluation of gold, or through market forces, because there's simply not enough physical available for everybody wanting to flee this monetary system, or by design, because central bankers will come together, G20 or IMF, and say on a Sunday, from Monday on, we are buyers of gold for $5,000 or $10,000.
So seeing as you put imminent out there, do you have a price outlook for gold and for Bitcoin?
For gold within the next decade, between 5 and 10,000 minimum.
Okay.
For Bitcoin, within the next 2 to 3 years, minimum 100,000.
Wow.
And because it's such a scarce digital asset, and it's digital gold. I mentioned in the book, in the Dutch translation of the Big Reset, in 2014, I called Bitcoin digital gold, and it still is.
All right. Well, you are an example of how gold and Bitcoin can exist in harmony.
Oh yeah. I love harmony.
All right. So we'll end it on a harmonious note. Willem, really appreciate your insights.
So
Thank you so much for joining us here on Kitco.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.